So something really interesting is happening in the market right now. You've got these two massive forces that have been driving everything this year, and, well, they've just started pulling in completely opposite directions. The AI boom is showing some cracks, while at the very same time, the Federal Reserve is quietly turning the money spigot back on. Let's break down what this incredible tug-of-war really means.
This quote right here, it just absolutely nails the feeling in the market at this moment. It's not about a big crash or a rollover. No, it's about a fundamental change in character. And we're about to dive into exactly what that change looks like and, more importantly, what's causing it.
So here's the deal. You really have to picture the market as being in this massive tug-of-war. We've got two giant, powerful engines pulling in opposite directions, and how they balance out is reshaping the entire investment landscape as we speak.
Okay, so on one side of the rope, you've got the AI engine. The one that's been the star of the show all year. But it's starting to sputter a little bit. And then on the other side, you have this quieter but incredibly powerful liquidity engine that's just firing up, all thanks to the Fed. This right here, this is the new dynamic we're all trying to figure out.
All right, let's dig into that first engine, the AI engine. I mean, for months, it felt like nothing could stop it, right? It was just this unstoppable force. But now we're starting to see some real cracks appear in that story of infinite AI-fueled growth.
And this chart, man, it just paints the perfect picture of this shift. You can see the tech-heavy NASDAQ was down 1.6% for the week. But look at the Dow Jones, which is full of more traditional industrial companies. It was actually up 1.1%. This is a classic, textbook signal of money rotating just beneath the surface. So why the sudden change of heart on AI? Well, it's not just a feeling. It's coming straight from the companies themselves. We saw huge players like Oracle and Broadcom. They delivered solid earnings, sure, but their comments about future growth, they just didn't have that blockbuster excitement investors had gotten used to. And even Nvidia, the absolute poster child of the AI boom, couldn't catch a bid. News that should have been good fell flat, and then reports of potential product delays really weighed on the stock.
Okay, so as that AI engine is cooling down, there's another one just starting to fire up. This brings us to the other side of that tug-of-war, the Federal Reserve, and its subtle but very, very powerful injection of cash into the financial system. And this is the number that really got everyone talking. $40 billion. That's the amount of treasury bills the Fed just announced it's going to start buying every single month. That is a massive figure, and it sends a crystal clear signal that they want to keep money flowing through the economy.
Now, of course, the Fed is being super careful. They are not calling this quantitative easing. But the market has its own name for it. QE Lite. It's basically seen as a form of liquidity insurance, the Fed stepping in to provide a cash safety net, which can be a huge tailwind for all kinds of different assets. Of course, this QE Lite action happened right alongside the Fed's main announcement. They did cut rates by a quarter point, just like everyone expected. But the really telling part is in the details. The decision wasn't unanimous, there was some debate inside the Fed, and their official statement kind of hinted that getting more rate cuts down the road might be a lot harder. So it's a complex picture.
So you've got one engine sputtering and another one firing up. What happens when these two massive forces are pulling at the same time? Well, you get what we're seeing right now, a broadening of leadership across the market. I mean, it's pretty simple when you think about it. That money has to go somewhere. As investors get a little more nervous about the handful of mega-cap tech names that have led the charge for so long, they're starting to look for fresh opportunities in other, maybe previously overlooked parts of the market. It's a classic rotation. And you know what's cool? We can actually measure this shift in mood. The Fear and Greed Index, which is a popular tool for gauging how investors are feeling, just gave a reading of 42. So what does a 42 actually mean? Well, this quote explains it perfectly. We've moved away from the fear zone, but we're definitely not in greed territory yet. That conviction is selective, investors are cautiously putting money to work, but boy, are they being picky about where it goes. And you don't have to take my word for it. The evidence of this selective buying, it's right here in the numbers. While the tech-heavy NASDAQ was struggling, the Dow Industrials and the transports held up just fine. Even the Russell 2000, which tracks smaller companies, managed to hold its ground. This is exactly what broadening participation looks like in the real world. Okay, so it's pretty clear the market's personality is changing. The big question for all of us is this new character here to stay?
Let's talk about what you need to watch for in the week ahead to find out.
And listen, the week ahead is absolutely packed with data that's either going to back up this new story or completely challenge it. We're getting a critical inflation read with the CPI report, a deep dive into the labor market, and key updates on economic activity. On top of all that, earnings from giants like Micron, Nike, and FedEx are going to give us a real-time pulse on how companies and consumers are doing outside of that big AI bubble.
So if there's one thing to take away from all this, it's this. The simple, one-track story of AI goes up, so the market goes up, that chapter seems to be over, at least for now. The new plot is way more complex. It's about Fed liquidity, it's about money rotating between sectors, and it's about a market-wide search for the next group of stocks to take the lead.
And that brings us right back to the most critical question for you, for me, for every investor out there. We know the market's character is changing. So as this evolution keeps going, where is that next wave of leadership going to come from? That is the multi-trillion-dollar question right now.